We are up 2.95% in our Roth IRA today. Here's an all time. We've literally started this Roth IRA less than a year ago. I just try and put $20, $30 every month into my Roth IRA. But here are the stocks that we own in here. We got one share of Amazon. Yo, we have a really risky stock in here. Y'all are going to bully me for. I got Build-A-Bear Workshop stock. And look at that. Look, yeah, they're up 1,700% the past 5 years, and I'm down on my positions. So anyway, oh yeah, here's my main taxable account. Great day. Congrats if you own any stocks. We're up 2.2% on the day. Every stock we own in here is up on the day, which is amazing. Oh yeah, here's the today's return. Yeah, how's y'all's portfolio doing today? Yo, Matthew made 21% on Celsius in less than a month. Do you think it's time to sell? Yo, to be honest with you, I don't know how much of your portfolio is in Celsius, but I would consider taking a little bit of profits on this company, and I'm going to share why. Now financial advice, but yeah, look at that. They're up 3.7%. But if you're wondering, like, why did the stock collapse from $90 all the way down to 34? Well, if we just go to the net income right here, look at that. They used to make 40 to 80 million of net income a quarter, but in the most recent quarter, they actually lost 18 million. So they're losing money, and the sales are down 5%. So they lost their growth. So they did just acquire Alani, though. Has anyone heard of that energy drink company? They acquired Alani, so that should bring back some growth. But I wouldn't put a huge chunk of my money with them. Or I'd maybe consider trimming a little bit of profits. Let's see what's up, Matt. Wait. Well, here, Coconut says MU stock. Yeah, this is Micron Technologies. This is like AMD's competitor. I would happily own this stock, but I own AMD. But check this out. They had a phenomenal quarter. Check out their compute and networking business. It was up, 108% year over year to 4.6 billion. Incredible. Their storage business was up 53% year over year. But anyway, the bottom line is the part we want to look at, the net income. They made 1.5 billion of net income in the most recent quarter. If we zoom out, check that out. They used to lose billions every quarter. So they finally are more they're being consistent with their profits. So MU, I really like them. I own AMD though. Let me show you this. Yeah, check that out. AMD finally, dude, they're up 6.86. They're up 6.9% on the day. That's incredible. They keep on going up. So we're still down, 8% all time on that one. Yeah, if we just go to this portfolio, don't listen to me. I'm not an expert. I'm down 12% all time in this portfolio, full transparency. So yeah, let's see. I bought because they purchased Alani. Oh, hey, that I wonder how that's going to play out. The thing with Celsius has no debt at all. Celsius is a debt-free company. I actually have a watch list of stocks with no debt. Like Reddit has no debt at all. Duolingo, you've maybe heard of the language learning app. Palantir, Pinterest, Yelp. Dude, I own Yelp. Zoom, they're all debt-free companies. Whenever I find a stock with no debt, I just add it to the watch list. And check that out. I own Yelp. It's like the review people. They're a pure growth stock. So with no debt, they just do crazy buybacks. Oh, another stock I've been buying, Sprouts Farmers Market. They're like a healthy grocery store. I got 7 shares of them now. They're pretty cool. Let's see. Marathon killing it today. Yeah, that's one of the stocks that just follow crypto. Whenever Bitcoin goes up, these Bitcoin mining companies go up even more. Look at that. They're up 15% on the day. But unfortunately, if we look at Marathon right now, they're nowhere near their all-time highs of like $65. And if we looked at Bitcoin, they're not. Well, what I'm trying to say is Marathon has dramatically underperformed Bitcoin over the long run. This was Marathon's all-time high when Bitcoin was at 57. Marathon is nowhere near. Anyway, I think you kind of get the point there. But congrats if you own them. They're up 15% on the day. Has Tesla finally made a reversal? Hey, they might have put in a bottom. I'm not sure. Maybe a local bottom because they were up like 10% nearly. Yeah, here's my watch list down here. Qs are up. Wow, we're at a new intraday high right now, dude. This is incredible. Yeah, Tesla's up 9.5%. That's nuts. SoFi's up 5%. Yo, anyone got SoFi in here? I got some of them. Let's see. MongoDB. What up, Reddit? Yo, Reddit knowledge. Have you seen Reddit stock? They're going crazy today. All right, so here's MongoDB. This is like a software stock, I believe. They actually have not done too good recently. They just gapped down like crazy. Let me check their most recent earnings. So they beat on revenue, they beat on net income, and they beat on EBITDA. So Why the stock is down, I don't know. They maybe gave bad guidance. Yeah, check this out. They usually lose net income every quarter, but in the most recent quarter, they made 15 million. So, I'm not too sure why the stock is down. Maybe it's a buy the dip opportunity. What are the sales doing? Yeah, the revenue's up 19% year over year. That's great growth. So yeah, I'm not sure why they're down. Maybe it was guidance. Sentinel One. Yo, what is that ticker symbol S? Yep, I guessed it, dude. They're one of the few stocks. There can only be 20 stocks with one letter ticker symbols. And there's no like letter Q or something. But anyway, here's Sentinel One. The stock has not done too good, but let's go check out the fundamentals here. What are their sales doing? So, wow, look at the sales. They're up 29% year over year to a new record. So, sales growth is there. That's great. What about net income? Are they profitable? Oh, so look at that. They're losing money every single quarter, about 70 million a quarter. But the sales growth is there. The sales are up 30% year over year. So they have a good balance sheet as well. I wouldn't be opposed to buying this stock actually. They're losing money right now though. I just really like to see them get profitable. AREC. What's this one? What up, kiddo? American Resource. So yeah, if you look in the top right here, this one looks extremely risky to me. You see the market cap, they're only worth $47 million. So that's an extremely small company. They're up 22% on the day, but it's not hard to move this stock. So yeah, they don't the, this ain't good. So the revenue in the most recent quarter was only 200,000, and last quarter it was 4,000. And they have more liabilities than they have assets now. So in my opinion, this company is like extremely risky. I would not trust any money in that stock. Again, not financial advice. The stock could hypothetically still double from here, but I just don't. If I'm going to buy a stock on a dip, I'd rather buy one with great fundamentals. And there are a lot of those stocks out there. And check this out, like this stock right here. I'm not recommending buying this one. I lost a lot of money on this stock right here. So make sure you have a diversified portfolio. Don't put all your money in one stock. And make sure if you're going to buy a stock like this, keep dollar cost averaging into it. Make sure it's a high quality company like an Apple or, ooh, here's a really cool one. Oh yeah, Wreck-It Ralph said ARCO. This is South American version of McDonald's. This is actually the largest. It's like a group of oh, I'm gonna word this wrong. It's a bunch of McDonald's franchises in other countries that's a publicly traded stock. So look at this. It's a bunch of McDonald's, and they have a deal with McDonald's where they have a very low franchise fee. Like they don't have to pay McDonald's that much fees compared to other people. And hey, I don't mind. I'd definitely rather just own the real McDonald's stock because they're a real estate company. They collect the high margin royalties. This is the real winner. But yeah, McDonald's ARCO, that's a cool one. Yeah, dude, Bullet, what's up, man? FIX, dude, it's doing great today. Check this out. We're break even on them now. We're up 0.3%. So yeah, we've been dollar cost averaging into this stock right here. They're my largest holding in this portfolio now. We literally, I can't believe it. We perfectly timed to buy a share at 305, but doesn't matter. We were buying this stock at 420. But yeah, congrats if you own them. They're up like 6% today. Oh, here we go. Maddie said TSM. Yo, this is Taiwan Semiconductor. I love this stock right here. Largest market share for the wafer chips, those like 5 nanometer wafer chips. Check this out. Look at their market share. It's literally growing. It's a 67%. So that's incredible. But the best part is the net income they make. Literally just in the past 3 months, they made 11.4 billion of net income. That's just incredible. And the quarter before they made 10 billion. So this company's making over 40 billion of net income a year in US dollars. Yo, Aggressive said OPEN. This is Open Door Technologies. This is the real estate company where you can like view houses without having like an agent guide you. So anyway, this stock unfortunately is at an all-time low right now. They just burn investors' money. So look in the top right, the market cap. They're worth $800 million. That's what the whole company's worth. But look at the net income. They lost just in the past 3 months $100 million. And well, look, they pretty much lose $100 million of net income a quarter. So anyway, don't buy that stock. In my opinion, I think that stock will literally just keep on going lower, slowly just keep on going down. Yo, what up? Thomas said TLX. So it's an Australian company, Telix Pharmaceuticals. So look at that. There's an American Telix Pharmaceuticals and an Australian one. Do you want me to look at the Australian one? We'll look at this stock. It's at an all-time high. Look at that. They're up 5% on the day. What are the sales? So precision medicine, the sales are doing great. Yeah, look at the revenue for the full year 2024 was 700 million. The net income was 50 million. So hey, not bad, bro. Um, Big dividends like CSL. Yo, I own CSL. Or wait, oh, yo, Reddit knowledge said Palantir. Yeah, let's check out Palantir, dude. This is an insane growth company. They have no debt at all. Palantir is a debt-free company, and the government loves them. Check this out. Most of their revenue comes from the government. A lot of police stations use their software, their AI solutions, and look at that. The government revenue is up 41% year over year. I mean, that's incredible growth to a new record. Same with their commercial revenue. It's also up to a new record, up 31%. And they have a great balance sheet, monster balance sheet. Again, no debt at all. And how much cash do they have? Let's see. 5.3 billion of cash. So yeah, Palantir is a cash cow. Um, Cheap AUD2 versus USD. Hey, yeah, they can convert the money back for more. Yo, Zscaler, yeah, ticker symbol ZS. So this is a cybersecurity stock. They have a subscription. Check this out. The stock's done well. It's kind of flat. Look at that. It's kind of flat for the past couple of years here. But look at this revenue growth. This is consistent growth. It's impressive. It's up 25% year over year to a new record. So look at, let me go to this annually. Yeah, look at the revenue since 2019. It was 190 million. Now it's 2 billion. So incredible growth from Zscaler. But are they profitable yet? So they're super close to profitability. Like they only lost 7 million in the most recent quarter. Like, yeah, if we zoom out, they used to lose 100 million a quarter. And now I'm guessing this time next year, they're going to be net income positive. So anyway, Zscaler is a nice cybersecurity stock. Yo, what up? Muis says IREN. IREN LTD. Let's check this out. Hey, if y'all want to support me, I'm streaming on YouTube and TikTok right now. I'd appreciate if you guys would, from my TikTok stream, would go to my YouTube channel and watch the stream from there. This TikTok account has been like banned literally 4 times. So anyway, IREN. Let's check it out. And I don't sell anything. I don't got a course, book, Discord, WhatsApp, Telegram, none of that. Just on here giving my opinion. So don't take this as financial advice. Look at the revenue on IREN. It's up to a new record, 117 million, and they even made net income that quarter. Wow, 18 million of net income. That's actually really impressive. I actually do like this company. Yeah, wow, they have a great balance sheet. Their assets are growing. So IREN, I'll actually add that one to my watch list. That one's interesting. They could be diluting you still. I haven't looked at all the details, but at first glance, the numbers look good there. So Zim Integrated. So yeah, this is the shipping company. Whenever there's supply chain issues, this company benefits. So yeah, freight revenue. This company actually has a rule where 50% of the net income they make will be paid out in a dividend. So if we go to their net income right here, you see how they made 560 million? Well, 250 million of that was paid out in dividends. So if you look in 2022, you got $27 in dividends that year. Well, the stock price is $15. So you got more in dividends that year than the whole stock price. But the next year it was only 6, and now it's 4. So it all depends. They're risky. I personally wouldn't own them. Or maybe I'd own a little bit. I wouldn't put a huge amount of money in them. Nathan, I'm back. Thoughts on GameStop? Yo, what's up, big? GME. Actually, out of all the meme stocks, I do like GameStop, and that's because look in the top right. You see the market cap is $11 billion. So this company, again, you do not buy them for the fundamentals. They're terrible. The revenue is down 20%, but there's hope because check out this balance sheet. They just did something incredible. They have no debt at all. GameStop has no debt and 4.6 billion of cash. So literally half of what you're paying at GameStop is just the cash they have on hand. So that's the good news for GameStop. Again, the fundamentals aren't good. The sales were down 20%. No one really is buying GameStop because I want to own GameStop's the business model. You're really hoping like Roaring Kitty tweets something. So out of all the GameStop's, GameStop's not the worst. But they're still like losing money. They're making a lot of interest on their cash. What app? Oh, hey, this app I'm using is called Moomoo. It's in the link tree in my bio. It's the first link there if you want to get it. Yeah, it's where I love all the analysis. Like it's where I park my idle cash. Like if you look in the middle of my screen right here, gets the nice interest. Let's see. T-Mobile. Then we'll look at NNE. So this is TMUS. They just partnered with, what's that called? Starlink. Has anyone heard of Starlink before by Elon Musk? T-Mobile just partnered with Starlink, and literally on that news, it was on the Super Bowl day. On the Super Bowl commercial, they announced it. They gapped up to $240. Anyway, the fundamentals are incredible. I wish I owned T-Mobile. I really did. I might consider them if they drop. Look at this net income growth. I'd way rather own T-Mobile than Verizon or AT&T. The net income was 3 billion, up 48% year over year. Phenomenal, net income growth. So T-Mobile deserves the hype. So he says nano nuclear energy. So yeah, let's go look at the nuclear energy stocks over here. Let's see. Yeah, so wait, NEE, is that on the watch list? That is not on the watch list. Or wait, NNE. So there's NEE, but not NNE. These ticker symbols. So anyway, this is Nano Nuclear Energy. This company is a startup, I believe. So let me double check this for you. Here's why I'd be careful with this one, in my opinion. Here's a look at that. They're a startup. They've never sold a product or a service. They've never made a dollar of revenue because they're a startup. So I would just be careful because there's no value yet to the stock. They don't make any revenue. But I actually own the largest nuclear energy stock, Constellation Energy. This company owns 50% of all the U.S. nuclear energy stocks. So this company actually has assets. They own the most nuclear reactors in the U.S. So this is the pure play for nuclear energy. So that's why I own CEG personally. I have 15 shares of them. Yeah, look at we're up 2% on the day, dude. Congrats if you guys own any stocks. The market's flying today. Every stock that we own is up on the day in here. What about our Webull portfolio? Dude, I know AMD was up. Dude, AMD is up 7% now. No way. Yeah, let's go. I mean, again, if we're down 12% all the time in here, full transparency, don't listen to me. But let's go back to looking at more stocks right here. So, I bought in at the bottom. Hey, what's up, Johnny? How's it going? How are we feeling about Lunar and LAZR? Well, let's check out LAZR. I've never heard of that one. Lunar sends rovers to the moon. Well, I'll give you. So LAZR, Luminar Technologies. So they're only worth $240 million. So this is a very small company. They're worth $240 million. Autonomy Solutions. So yeah, look at that. The revenue's down 13%. It's only $9 million. Their advanced technology revenue is flat. So this company isn't growing. That's probably why the stock price just has been going down and down. The business isn't really growing. They have more liabilities than they have assets. And actually, that was a one-time adjustment. See how they made net income in the most recent quarter? That was an accounting little fidget, because if we go to their operating profit, they actually lost $105 million. So anyway, I would not buy that account. Dude, wow, I might short that one. Hold on. LAZR. They lose literally their whole market cap in 6 months. I mean, they're down 13% on a day where everything's really green. You know what? I'll add that one to my watch list in case I'm looking for a stock to short. I promise I'm not trying to bag on anyone's stock here. Yeah, if you guys got any stocks you want me to look at, let me know though. VWS is down so much. Let's check it out. Buy. He said, wait. VWS. Well, I type in VWS, Sonny. I can't find that one, my friend. What's up, my guy? Thanks for the tips. Yeah, no problem. Ayla, I appreciate you. CNBC just highlighted AMD, stated going to 165. Yo, let's go, dude. AMD is up 7% on the day. I'll be really quick about why I own them. I know we've already went over them, but I'll be quick about this. Check this out. With AMD, you get a 17% PC GPU market share, so you get a lot of exposure to GPUs, but mainly I like AMD for the exposure you actually get to data centers. Dude, half their revenue is now from data centers, and look at this. It's at a new record of 69%. I feel like no one's talking about AMD's data center growth. And also their client revenue, whatever that is, it's up 58% to a new record. So anyway, if we look at the FCF, which is free cash flow, the free cash flow is at a record. If we look at the balance sheet, it's amazing. No net debt at AMD. So anyway, I do own them. I might be biased on the stock, but I own them for a reason. And again, that's not a stock you want to have a huge amount of money in. Like you see how I have SoFi, Robinhood. These are stocks you don't want to have a ton of money in. You don't want to have your, like 10% of your portfolio in those kind of companies. Again, nothing in this is financial advice. I only hold 2 ETFs, BITO and BITX. Pays a 4% dividend every month. Yeah, isn't BITO a Bitcoin covered call ETF? So I believe this ETF just sells calls on Bitcoin. And Bitcoin is an asset that has high premium. So yeah, it has a 75% dividend. So yeah, nice. Yeah, that's what you want to buy those if you're trying to maximize your income. You're not going to outperform the S&P 500 owning those. But yeah, someone said, Trapper, what's up, man? Someone said SIRI. So yeah, this stock has not done too good the past couple months here. They had some kind of spin-off or something. Yeah, they own Pandora and SiriusXM. Um, so if we look at their net income right here, they had a one-time adjustment. Look at that. They lost $3 billion. It was obviously a one-time adjustment, but the revenue is down 5% year over year. So they're kind of not growing much anymore. But they pretty much just make 400 million of net income a quarter, and then they pay most of that out in dividends. You get a 4.5% yield. And the payout ratio says negative 21%. That's because it's looking at that one, it's adding in the quarter where they lost 3 billion. They actually have a sustainable dividend, but that's when you're not going to outperform the market owning, but they're decent. They're decent. Thoughts on MOD and VRT? What's up, Ty? So here's Mod Manufacturing. I really like this stock actually. So let me give you a quick analysis on them. So look at their climate solutions right here. The revenue is up 42% year over year. So that's some nice growth. 42% growth. Performance technology. So look at this. Got to be careful. This is down 15% year over year. Corporate, yeah. So if we blend those together, yeah. So the revenue is up 10% year over year. That's still good, but the net income was down 10% to 41 million. So did they? Yeah, they lost their margins. Yeah, the margins went down. So it's like a mixed bag on Mod. Do they pay a dividend? I don't think they do. They don't. So anyway, oh yo, NA, this app is called Mumu. If you want to download it, it's in the link tree in my bio. It's the first link there. It's where I'd like to park my idle cash. Like if you look in the middle of my screen right here, you know, get the nice little interest. AAL, dude, this is American Airlines. To be honest with you, I don't love the airlines. If we go into a recession, people just won't book as many flights anymore. And, we can kind of see that in 2019, they lost so much money during the pandemic. They were losing like $1 billion of net income a quarter. But now, nothing's really blowing me away with the airlines to want to own this. Like, look, the net income is just really choppy. Like, they make money, lose money. They had to cut their dividend in 2020. They don't pay a dividend anymore. So anyway, the airlines are just nothing blowing me away there. Here we go. OKLO, please. Yeah, this is another nuclear startup right here. So this stock mainly just moves with the nuclear stocks. They're up 13% on the day. Geez. Congrats if you own them. So yeah, if we go to their actual revenue right here, you see how it says no data? That's because they're a startup. They've never sold a product or a service. They've never collected any revenue. So that's why I wouldn't put a lot of money into this one just because they're revenue-less right now. So yeah, here's my portfolio. Every stock is up on the day, except of course for our big loser. Here's why you don't listen to me. This isn't financial advice. You could lose a lot of money on a stock. So stay diversified. This isn't personalized advice. Always do your own research. Do you think Nvidia will go up? Nvidia is up today. Yes, sir. AMD was up like 7%. Let's see. AMD was just 99 last week. Dude, I didn't buy much AMD, but I did buy some AMD at under 100. Yeah, they're up 6.8% on the day. Yeah, you can kind of see my buy orders. Like I was buying some at 105, under 100, but I mean, still our average cost basis is at 125. Anyway, let's look at some more stocks here. Absolute Rally. Hey, what up, Josh? Yes, sir, dude. This is great. What up, Ethan? TFPM. What stock is that? So Triple Flag Precious Metals. So look at that. The stock's at an all-time high. I'm going to assume this one's related to gold. Acquiring and managing precious metals. Yeah, look at that. The revenue is up 20% year over year. Nice. How's the balance sheet? Yo, look at that. They have no liabilities, like so much cash, no debt. That's a phenomenal balance sheet. And look at that. In the most recent quarter, they made 41 million of net income. So they're really profitable, actually. Wow. I do like this stock, actually. I can see why they're at all-time highs. Yo, user says PSNY, economy looking good. So, this is Polestar Automotive. Ooh, check this out. There's a little technical analysis. Let's see what Mumu says. There's a bearish flag, they say. So I guess that from a technical point of view, that's not great, I guess. So yeah, they just sell vehicles. They sell commodities. So let's see how their sales are doing. Sales of vehicles, well, actually, let me just go to the revenue right here. So the revenue is down 16% year over year. What about profits? So, yo, here's why I hate this. I would probably just avoid this one. They lose money every single quarter. Yo, I just don't like to buy companies that lose a lot of money, and they're losing a lot of money. So they lose over $1 billion a year. How much are they worth? They're worth $2 billion. No way. So they lose literally the whole company a year. So yeah, I would stay away from that one. I'm sorry. They just lose a lot of net income. I just probably wouldn't put much money into them. APLD in North Dakota. Yo, that's a stock owned by Nvidia. So check this out. Yeah, if you're looking for stocks to buy, we can see like Warren Buffett's holdings. Has anyone heard of Nancy Pelosi before? She gets paid 100K a year, but net worth is over 100 million. Yeah, we can see her portfolio the past 5 years. She has outperformed the market. She's been buying some weird stuff like PayPal, Comcast, Disney. Anyway, oh yeah, we were looking at Nvidia's portfolio. I got distracted there. Yeah, Nvidia actually owns some individual stocks, and Nvidia owns some APLD. So let me give you a quick analysis on them. Now, there's some good news and there's some bad news. I'll go over the good news first. Look at this cloud business growth. I mean, it's unbelievable. A year ago, the revenue was 2 million. Now it's 27 million in the most recent quarter. So that's incredible growth. It's at a new record. At this growth rate, what's it going to be next quarter? Yo, Roddy, he said, what was that last stock you seen? I don't remember. I'm streaming on YouTube right now and TikTok. So if you want to go to my YouTube stream, you can rewind it and find what stock it is. Yeah, if you guys want to support me, I don't sell anything. I don't got a course book, Discord, WhatsApp, Telegram. I don't got none of that. Watch out for people impersonating me. If you just want to support me, go subscribe to my YouTube channel and watch the stream from my YouTube channel. It would help me out a lot because my TikTok account has been banned so many times and I'm scared it's going to get permanently banned. So anyway, how are you seeing a bearish flag on Mumu? It just automatically draws it. Like if you go back to Polestar right here, whenever there's technical analysis, this app, like I did not draw that. They just draw it for me. That's what's cool about this app right here. Yeah, if you want to download this app, it's called Mumu. It's in the link tree in my bio. It's the very first link there. So that's what's cool. Oh, yeah, and then if you look in the middle of my screen, it's where I like to park my idle cash. So anyway, any stock we should buy today with the rise. I bought some Dutch Bros already. Oh, he bought some Dutch Bros today. Let's check out Dutch Bros. This is like Starbucks' competitor. Look at that. They gapped up huge today, up 8%. I've been there before. When I was in Arizona, I did go to a Dutch Bros. So check this out. Here's what's so impressive about them. Look at their company-operated shops. This growth, for a restaurant in this environment to grow their sales 39% year over year, that's really impressive. So there's a lot of demand for their, restaurant. And look at the net income. They're now making net income every quarter. This is a profitable company. What about the free cash flow? Yeah, look at the free cash flow in the two most recent quarters. It just jumped up. So anyway, Dutch Bros is nice. Let me check my Robinhood portfolio real quick. I haven't done that in a while. Yeah, look at that. We're up 1.96% today. We're slowly falling right now, but just a healthy RSI retrace, hopefully. Yo, Bozen, thank you so much for the roast there, dude. I really appreciate you. Yeah, if you got a stock you want me to look at, let me know in the chat. I'll check it out for you. Um, let's see. Do you think the S&P 500 Vanguard is very trustworthy? I think so, Ryan. And if you don't want to buy that one, you could also buy the SPY. It's the same ETF, just run by different people. All you got to do is look at the top holdings. It's pretty much the same as the S&P 500, or it is the same. It's Apple, Nvidia, Microsoft, Amazon, Meta, Google. So yeah, look at all the stocks, dude. Qs are up 2. Tesla's up 10. Apple's fallen. Look at Apple. Yeah, that's probably why the market's kind of fallen right now. But anyway. Let's see. LTBR. Thanks so much. Yeah, let's check it out. LTBR. And then BYD. Yeah, we'll check out BYD as well. I've not heard of this stock before. So Lightbridge. So the stock's done pretty decent the past couple weeks here, but they're only worth $200 million. So this whole company, yeah, look at the stock. They used to be, $1,000 companies. So they did some reverse splits. So let me just go to the revenue right here. So yeah, look at that. I would not buy this company. Look at that. They just lose net income every quarter. They have a good balance sheet. Look at that. They have no debt and a lot of assets, a lot of cash. But I mean, they don't sell anything. There's no revenue and they lose money every quarter. So there must be some good news for the stock to rally recently, but that's one I would avoid. Do I have I do ESPN. I do not have a Discord. I don't have nothing. I don't got none of that. I don't have a Discord, WhatsApp, Telegram. So watch out for people impersonating me as well. There's a bunch of people impersonating me. Oh, hey, and this platform is called Mumu. If you want to get it, it's in the link tree in my bio. It's the first link there. Can you take a look at, BYD and JD. Those are both Chinese stocks. So this is the Chinese Tesla. They make more net income than Tesla does. And they're over they're a $1.1 trillion company. And they're doing incredible. Obviously, you'll never see these cars in the US because they're sanctioned, but or they're tariffed so much, but they just made $15 billion for the full year 2024. They make a lot of money. Wait, let's see here. No, this is not financial advice, Daichin. JD as well. Yo, that's part of the Chinese tariff tech plays. Let me go to the watch list right here. So yeah, China tariff tech. My favorite Chinese stocks are Tencent and Alibaba, AliExpress right there. But yeah, here's JD right here. Um, let's go look at the fundamentals here. So the PE is dog cheap. They're trading at 11 times net income, so that's a very low valuation. Active customers, they have 588 million annual active customers, so that's a lot. What about the net income? So yeah, look at that. This is in US dollars. They're making over $1 billion of net income a quarter. So nice. They are Chinese and the stock hasn't done too good. So, but the valuation is really low on them. But that's, a lot of Chinese stocks traded at a low valuation. Landon said MLGO. What's up, Landon? Micro algo. So yeah, don't buy this company. If you look in the top right, they're only worth 93 million. Again, not financial advice, but this looks so risky. The whole company is worth 90 million. And yeah, wait, that's only because of today. Look at that. They're up 270% on the day. Wait, shares. There must be some good news. And announced a $20 million offering. I would just stay away from this company. I mean, this is not the kind of stock I'd trust a lot of money in. Let's see. Yo, what up, Scott? He says RGC. Let's see. RGC. So, Region Cell Biosciences. So, yeah, these are some really risky companies you guys have. So, this one's worth, $500 million. Looks like they just rallied up recently. There must have been some good news. Maybe they got like FDA approval. They can finally sell something. Well, let's see. Do they sell anything right now? No. This is from 2017. So if we go to their current balance sheet, look at their assets right now. They have 8 million of assets and no debt, but look at their assets just decline. That's so depressing. Look at I don't buy that company. I mean, that one. Oh, yo, Jeremy says HIMS. Now, this is an interesting stock right here. This company actually has no debt at all. HIMS is a completely debt-free company. They don't owe anyone any money. And look at this sales growth. This is what's incredible. The sales are up 95% year over year, literally to a new record. So that's some incredible growth, and that's why I like HIMS. And they're debt-free. They're making free cash flow, net income every quarter, so they're profitable now. Yo, someone said, look at AMD going to the moon. What up, Jay? Yeah, dude, AMD, they're up 7% on the day. Dude, let's go. I do own them. I'm still down on my position. My average cost is at 124. But today's a great, little recovery, up 7%. Yeah, a lot of stocks are up today. How's y'all's portfolio doing? It's gotta be green today, right? Yo, Kevin says Sundial, SNDL, or this isn't Sundial, but the stock is not doing too good. Look at that. The stock is close to an all-time low. Yeah, they're only worth 400 million. So the whole company's worth 400 million. So they sell drinks. So check that out. So that is down 10% year over year. This operation, that's up 2% year over year. What about the net income? Because that's what matters. So yeah, they lost 50 million the most recent quarter. That's a lot of money to lose. So the sales are down 5% and they're losing a lot of money. So for me to consider this stock, I'd want to see them get way closer to profitability. But yeah, if they lose 50 million in 3 months and they're only worth 410 million total, that's not great. Hey, what up, Jello? How's it going? What are your thoughts on XRP? Yo, XRP, that's a crypto. I wish I could give you more thoughts on them. Like, all we can really do is look at the stock price here. But yeah, congrats if you own them. Like, if you bought them at the, 60-cent level, they're doing great. And when the market was falling, like Ethereum was down 40% in 3 months, XRP didn't fall that much. Oh, yo, what up, Catherine? MU, yeah, this is Micron Technology. We just looked at AMD. If I didn't own AMD, I would highly consider Micron Technology. But I already own AMD, so that's why. But check out the growth here. It's incredible. Their computer networking business is up 101% year over year. It's doubled. And that's the main business of theirs. But the best part's the bottom line, the net income right here. They made $1.5 billion the most recent quarter. When if you zoom out to the previous year, they were losing $1 billion a quarter. So they've really turned things around here. So I really like that about MU. And look at that. You also get a small dividend, small growing dividend. Let's see. Is this Robin? This app is called Moo. No. If you want to get this app, it's in the link tree in my bio. It's the first link there. So here's another stock, Backblaze. Yo, these are some really small companies. So this one's only worth 300 million. very small market cap. So computer backup, let's see. How is their computer backup revenue doing? It's up 14% year over year. That's actually not bad growth. So that's up 14%. How about the cloud storage? Hey, that's up 21%. So this company actually isn't terrible because they are growing their sales. So yeah, sales are up 17%, but they are losing net income. Like 10 million a quarter. What was the market cap again? That might not be too terrible. Oh, that is kind of bad. They're losing 40 million a year. Oh, they're losing like 15% of their market cap a year. I'd really like to see them get net income positive. Because I was liking the growth there, the sales. They're probably just gonna keep diluting the shareholder. Nvidia or SMCI? Yo, let's look at Nvidia. Or I'll show you my Super Micro. I do own Super Micro. Look at that. What's weird is Super Micro's down on the day when like AMD's up 7%. But yeah, I do own 10 shares of Super Micro Computer. I'm just going to hold on to my 10 shares, but here's NVIDIA right here. Let me give you a quick analysis on NVIDIA. They're up 3.5%, so nice if you own them. So check this out. We can see their PC GPU market share. They have a big 18% market share, so that's crazy. Their automotive revenue keeps on going up. They have partnerships with WeRide and GM. But look at the bottom line, the net income. They made $22 billion just in the most recent quarter, so that's incredible net income. They're extremely profitable. That's why I couldn't sell NVIDIA. Like when I saw NVIDIA down 104 and AMD at under 100, I'm like, who's selling with this incredible growth? So anyway, I I would sell out of a stock when I see the growth go away. That's why I sold out of Nike. I feel bad selling out of them. Now look at that. I sold all my Nike up here at 79, and then they just kept on going lower. I honestly wish I sold Nike, and then I see the stock just keep on going up. But yeah. Let's see. What about AGG? What up, only AGG? What is this stock? So iShares bond ETF. So yeah, looks like this ETF, yeah, just owns a bunch of bonds from like companies. So or maybe they own treasury bonds. Yeah, looks like they own T-bills. So yeah, you should just get a nice dividend. Yeah, 4% dividend. Backed by the U.S. government. So it's a safe dividend. Let's see. ARR, is that Armor Residential REIT? Yeah, dude, please don't buy this. Or you only buy the stock if you want to maximize your dividend income, because you will not outperform the market owning this stock. Look at them on the 5-year chart. They're down 50% the past 5 years. This is just not the kind of stock I want to own. This used to be a $300 stock in 2011, and now they're only $18. So that's because they literally pay out all their money in dividends and they don't retain any money left. Or sometimes they even pay out more than they make. So anyway, I'd be careful with them. You trust Mumu? Yeah, they're publicly traded. Even if Mumu goes bankrupt, it's FDIC insured. The same with Robinhood. Robinhood's publicly traded. Let's see here. But yeah, actually, and this app Mumu is also owned by Webull. So I don't know if you've heard of Webull before. But Webull owns Mumu. They're a publicly traded stock as well. Actually, I'll show you the stock. This app I'm using is called Mumu, and their stock is publicly traded, FUTU. And check this out. I like checking this. Even if they were losing money, they're FDIC insured. But look, they're making 100, 200 million of net income a quarter. They're doing great. How many active users does Mumu have? They have 25 million active users. How much assets? They got 95 billion. So anyway, if you want to download this app, you can download it with the link tree in my bio. It's the first link there. And I love all the analysis you can do. Like I keep my idle cash. Like if you look in the middle of my screen there. Let's see here. Oh, Rocket Lab Art is fighting with SpaceX. Dude, here's what's so cool about Rocket Lab. They have over a $1.2 billion of orders that it's a backlog, so they haven't fulfilled those orders yet. And check this out. Here's the best part. Look at their space systems revenue. Yeah, hey, try not to spam. Hold on. So yeah, check this out. Their space systems revenue is up 75% year over year. That's some incredible growth. So that's why I really like Rocket Lab. But you got to be careful, because even though the sales are up 75% year over year, they're still losing 50 million a quarter. Check that out. 200 million a year. But they have the assets to get through that. They can burn that net income for now. So as the sales grow, the net income losses should go away. Hey, what's up, Catherine? Yeah, hey, if y'all want to help me out, go watch the stream from my YouTube channel. I'm streaming on TikTok and YouTube right now. Yo, I don't sell anything. I don't got a course book, Discord, WhatsApp, Telegram. I don't got none of that. But if you do want to support me, I have a YouTube channel. It's in the link tree in my bio. It's called Nathan Robert, and I'm streaming on YouTube as well. And if you missed something, you can replay the stream and go back. But anyway, here's a VSAT. Yikes, this stock is not done too good. They're up 11% on the day, but they're not doing too good. So they're in the communication services. So yeah, if we just look at the fundamental business here, the main sales are down 6% year over year. Defense and advanced is actually, that one's up. Let me check their sales right here. So the sales are down 0.42% year over year, and they lost 150 million of net income. That's a record net income loss. So anyway, I can see why this stock hasn't done so good. I would avoid that one. They've just lost money every quarter. They usually lose 100 million a quarter. So nothing's really blowing me away there to want to buy them. I'm a new investor. Just bought 2 shares of NVIDIA. Yo, that's what's up, Sammy. That is awesome. Yo, Dylan said, what about Intel? Yo, I would rather own MU or AMD than Intel, but I'll show you some of the highlights on Intel. They have a huge GPU market share, 65% PC GPU market share, really impressive. But this is why I can't buy this one, just because they burn so much money. They lose so much money every quarter. Look at this. They lose 2 to 3 billion of free cash flow a quarter. The net income is even worse. Like, I don't know how, but literally just last quarter, they lost 17 billion. So that's why the stock, that's why the stock is so, has done so bad, because the fundamentals aren't good. So maybe, it could be all priced in, but I would look, if I wanted exposure to GPUs, that I would go with an NVIDIA or AMD until they're falling off. Yeah, they have a huge market share, Dylan, still. Yeah, that's the good news there. And the government will not allow them to go bankrupt. Do you think the market will go up from here or drop again? Yo, I wish I knew the answer to that, but I'm going to hope, I might be biased, but I'm going to hope that we hopefully put in a bottom there on the QQQ. If we go to the QQQ year to date, hopefully we're at a new low, because they just a couple days ago, they were down 9% year to date. Now we're only down 4.7. So I really do hope we put in a bottom. I mean, if we look at it on a chart, that would be a beautiful, uptrend, if this is the bottom right here. Like, that just looks perfect. There was the bottom there, and then we just continue here. So that, the little, this huge drop that we've had the past couple months, is completely normal for, the volatile QQQ. Anyway, thoughts on LUNR? What's Google and Google C? Yo, there's no difference, Ryan. The only difference of Google and Google C is the voting rights. I own GOOG. This is the non-voting rights. I own the version of Google where you're not allowed to vote, because I don't care. I'm never going to vote with my shares. If you could buy either one, they're both going to perform the exact same. Hey, what up, Sermon? How's it going, dude? So yeah, let's check out LUNR. This stock was doing great today. Yeah, they're up 23% on the day, but yikes, that's after, falling like crazy from $24. But wait, let's see. Was there any specific news? As backlog points to upside ahead. So it looks like they have a huge backlog. They recently ended its second moon landing mission. So cool. They have a lot of contracts with NASA and the government. The net income isn't too consistent right now. Like, they just lost 80 million. The balance sheet isn't too great either. They have like more liabilities than assets, but there's a lot of momentum around this name. Yeah, they're losing EBITDA right now. They're losing money. So they're not making any profits yet. So congrats if you own them, because they're up 23%, but I would not probably put a lot of money into that one. What's your favorite DCA right now? Yo, I'll show you what I've been dollar cost averaging into. It's kind of hard to dollar cost average, after today. Here's a stock. I was buying the dip on this company, APH. I sold all my Nike and bought this stock right here. Another stock, this is a high yielding dividend stock. If you like dividends, this stock has a 5% dividend, completely sustainable. I've made so many YouTube videos about this stock right here. Each one of these little buy things, that's where I bought the stock, by the way. That's one I've been buying. And Comfort Systems right here. I've been buying the dip like crazy on this stock. Anyway, that's just one portfolio. Thoughts on PLUG. So yeah, you're not going to like my thoughts on this stock. My honest thoughts is stay away from this company. Like, someone would maybe say like, hey, look at this stock. They're at a really low price. Do we buy the dip on them? I don't think we buy the dip on them. So just look at the top right of this company. You see how the company's worth 1.5 billion? Remember that number. This whole company's worth 1.5 billion. And look at the net income they lost just in this most recent quarter. 1.3 billion. In the quarter before, 200 million, 200 million, 300 million. So if you add that up for the past trailing 12 months, they've lost $2 billion in the past year. And on top of that, the revenue's not growing. The revenue's down 14% year over year. So in my opinion, do not buy this stock. You know, I feel bad if you own it. You know, I got trapped as well. Dude, I actually lost a lot of money here. No other TikToker or live streamer would show this. I just like being transparent. This is my biggest loss ever. I lost so much money on ChargePoint. It's kind of like Plug Power's competitor. So look at this back here. I'll be quick. I'll be super quick with this. But look, I sold all 66 shares at $2.85. I completely sold all my shares for a huge loss of $2.85 down here. And look, I bought all my shares. Oh, y'all aren't gonna believe this, dude. Yeah, I was buying all my shares up here at like $15. So I bought 60 shares at 15, sold it at 2. And thank goodness I sold it at 2. That's why sometimes it's good to take the loss. After this huge downtrend, I sold all my shares at $2 and well, now it's 68 cents a share. So normally stocks that are just burning money, yeah, this will look very similar to Plug Power. Look, if we go to this company's net income right here, look, this is why you have to look at the fundamentals. These companies just burn shareholder money. Look at that. They just lose net income every quarter and they dilute you and they're not even growing the fundamentals. The sales are down 12% on top of losing you a bunch of money. So anyway, I just like being transparent. Again, I don't sell anything. I don't got a course, book, Discord. I'm just on here giving my opinion. Look, I'm down 12% all time in this portfolio. So don't listen to me. Let's see here. What about J&J? What's up, AI man? What's up, dude? So Johnson & Johnson, this is a safety stock. You know, whenever the market's, you know, like look at them the past couple days, for example. The market's been very volatile. A lot of tech stocks have been falling, but Johnson & Johnson is like a defensive stock. They do good because of this dividend. A lot of investors seek higher yields in volatile times. And look at that. You get a sustainable qualified 3% dividend. So they can, you know, easily afford the 3% dividend, which is really cool. And if we just go to the net income right here, they just make, you know, 3 to 4 to 5 billion of net income every quarter. So yeah, that's just safety, reliable one. Let's see here. What are some stocks would you recommend for short-term investments? Ooh, like a swing trade. You know, I'm swing trading Super Microcomputer right now. I'm not too sure. Market for longer period of time. Yo, what up, John? Good to see you. Compared to the recent levels in the next 2 weeks. Yeah, dude. CNBC. Oh, Lucid. Okay. Or actually, let me look at Teladoc. I saw that one first. Let's go look at Teladoc right here. So this is a company as well that kind of just burns shareholder money. And I'll be super quick because this isn't one I would recommend. If we just go to the net income right here, they lose net income every quarter. They lost 50 million. They lost 800 million that one quarter. And if we look at the fundamentals here, like look at BetterHelp. You know, this is 40% of the revenue. The BetterHelp business, look at that, is down 10% year over year. So the fundamentals aren't really growing anymore. So I'd stay away from Teladoc, you know. Nothing's just blowing me away there to really want to buy that stock. Yeah, here, I'll show you my Super Micro position. You know, I bought Super Micro a long time ago. Check that out. I own 10 shares of them. Again, this one's super volatile and risky. That's why I said this one's a swing trade for me. This isn't like a buy and hold forever kind of company. You know, I got a lot of risky stocks. Like I got SoFi, Robinhood. Oh, look at this. This is a pharmaceutical stock I've been buying. They hit an all-time high today. I bought this stock at an all-time high. And usually stocks that hit all-time highs will just continue to keep hitting all-time highs, which is really cool. Again, not financial advice, but let's see. Yeah, AMC. Nah, dude, AMC. That's I'd way rather buy GameStop, dude. GameStop is like a million times better than AMC. So check out MSTY right here. This is a covered call ETF. So you only buy this stock to maximize your dividend income. And yo, Michael Salve, thank you so much for the roses, dude. I really appreciate you. Thoughts on Tonix Pharmaceuticals? Yeah, Michael, give me the ticker symbol on that one. Is that the Australian stock? Let me know the ticker symbol. I'll check it out for you. Thank you again for the roses. So yeah, this company has 150% dividend. That seems unsustainable to me. 150% dividend yield. So they just sell calls on Bitcoin, and that's an asset where you get a lot. That's why the dividend yield's so high. You know, you're selling calls on Bitcoin. That's a high premium asset to sell calls on. UAL or DAL? Which one's better? Yo, Bog, the better play is honestly Delta Airlines. This is my favorite airline stock, but again, I don't want to own any airlines. You're not going to outperform the market owning the airlines. Look, the stock has been flat since 2016, a decade of no stock price appreciation. And if we go into a recession, airlines just get cut spending really quick. If we zoom out to like 2020, look at that. They lost 5 billion that quarter. So if we get another 2020, that's not good. Oh, yo, what's up, Jack Martin? New here. How often are you live? I go live every day, twice a day. So I'd really appreciate if y'all want to hit the follow button. We're streaming on TikTok and YouTube right now. So yeah, for y'all on the 60 of y'all on TikTok, I'd really appreciate if y'all would go over to my YouTube channel, watch the stream from there. You can also replay it if you missed something. And I just really appreciate it. My TikTok account has been banned so many times. So I'm worried about it. Hey, what up? TXNP. Okay, TXNP. Yeah, thanks again, Michael, for the roses there. Wait, TXNP. Wait, TXNP. Maybe it's TNXP. Oh, there we go. Okay, I found it. I got you. So, yikes. Well, good news. They're up 30% on the day. That's great news. They're up 30%. But this whole company is only worth $190 million. That's nothing. So Zembrace, I don't even want to pronounce that. Zimtouch. Yeah, they don't sell much. Like the revenue's nothing here. The revenue was $2 million in the most recent quarter, and they lost $22 million. So nothing's really blowing me away here. I would not want to own that stock. Excellent play-by-play. Hey, thank you, Jack. Let's see here. TPL, yo, that's Texas Pacific Land. They own a bunch of land in Texas, and they collect Oops. Sorry, there we go. They collect high margin royalties from their land. So they have a lot that this company also just got added into the S&P 500. So if you own the S&P 500, you own a little bit of this company as well. On that news, the stock rallied up a bunch. If we just go to their net income right here, it's just really consistent, their royalty stream. They just make like 100 million plus of net income every quarter. Then you also get the small growing dividends. So yeah, that's an oil stock. They had too many splits too. Yeah, hey, what's up, Catherine? RR next. I'm up 80% on RR. So yeah, that's Rich Tech Robotics. I own a different robotics stock. I've heavily looked at Rich Tech Robotics before. They're up 11% on the day. Yeah, nice. Congrats if you own them. But here's why they're only worth $300 million. Here's the thing about this robotics company. If I'm looking for a robotics company of the future, I'm not trusting this one. Look, the revenue is $1 million a quarter. That's nothing. This company doesn't exist. They're doing $1 million a quarter. They lose millions every quarter. So again, I'm not trying to bag on your stock. I hope to see you do good. But I own a different robotics stock. I own ticker symbol SYM. This is a warehouse robotics company. Another robotics stock is just Amazon. Amazon's a robotics play, but check out this company's revenue. They have insane revenue growth. It's up 35% year over year. But you got to be careful here. They are losing net income every single quarter. So they're kind of like Rich Tech, they're losing money every quarter, but this one has a lot of revenue. So I just chose SYM over, I'm down on my position, but anyway, that's just my thoughts on that. Again, don't listen to me, not financial advice. We're down 12% all time in this portfolio, so definitely don't listen to me. Dude, AMD up 7%, dude. They're holding on to the gains. That's incredible. AMD's been bleeding for so long. Hey, yeah, no problem, Red Crypto. Let's see here. We already looked at Teladoc. Rail.cn. What is that a stock? Let's see here. Yeah, Jello. Yo, finally AMD's recovering. Yeah, well, actually, I'll show you my portfolio really quickly. Yeah, how's y'all's portfolio doing on the day? It's got to be green, right? Yeah, our main portfolio, we're up 1.86% in here. How's our Roth IRA doing? Yeah, the Roth IRA is up nearly 3%. Yeah, here's my share of Amazon. I do own literal one share of Amazon, so that's cool. Yeah, every stock that we own in here is green on the day. This is my dividend portfolio. Every stock in here pays a dividend. Even like Meta pays a dividend. I like them for the stock price appreciation. So here's a company. Here's why you really got to look at the financials of a company. So here's BYD. This is a Chinese electric vehicle company. This is my favorite Chinese EV stock. And then here's Lucid. So, actually, this one's not Chinese, but if you're wondering, like, hey, this is Lucid right here. What happened to the stock? How'd they go from, $40? How did they just slowly bleed out? How are they at $2.50 now? Well, that's because if we go to their net income right here, they just lose so much money every quarter. Last quarter they lost $1 billion. They normally just lose 600 million to $1 billion a quarter. So Lucid is extremely risky. They're burning shareholder value. They're actually diluting you while the stock is at $3. So anyway, I would not own Lucid or put a lot of money into that one. I would not buy the dip on that one. Oh yeah, hey, thanks. Yeah, this app is called Moo. If you want to download it, it's in the link tree in my bio. It's the very first link there. Yeah, I love all the analysis you can do on here. Like if you look in the middle of my screen, I got the cash interest. Yeah, it's all that. It's called Moo. Link tree in bio. First link there. Yeah, here's another cool feature they just kind of added on here. You can see like Nancy Pelosi's portfolio. We can see exactly what stocks she's been buying. She's been buying weird stocks like PayPal, IBKR. We can see her portfolio. She is definitely outperformed the S&P 500. We can see like Warren Buffett's top holdings. Warren Buffett owns a lot of the dividend plays, like Bank of America, Coca-Cola. Yeah, Batman, dude, the tech ETF right here, dude. Batman, look at that. Let's see how's they done the past 5 years. Wow, it's dramatically outperformed the S&P 500. That's probably from Broadcom, Meta, and all these names. Anyway, Rail CN, dude. Yeah, Dylan, this one I don't even want to look at this one, but I'll check it out for you. Yeah, I can't. How do I find that stock? I can't find that one. Let's see. I lost so much with Nvidia. Yo, how'd you lose with Nvidia, bro? That is not. I feel bad for you, man. They're up 3.5% on the day. That's what I love about. Does anyone else look forward to Mondays? The stock market's been closed all weekend. That's why I look forward to Mondays, so I can watch the market open. But check this out. Here's what I like about Nvidia. Huge market share, 18% PC GPU market share. Automotive revenues at a new record. From their GM partnerships. But this is why Nvidia is the best. Their net income just keeps on going up. 22 billion of net income just in the most recent quarter. So yeah. Let's see. Oh wait. Oh yo, not companies like Lucid. Check shares outstanding. Let's go check. Let's see. Has Lucid diluted you year over year? So they're worth 7.5 billion. So yeah, as we can see, Lucid. Here's why I would avoid them. They've never made a single dollar of net income. They've just permanently burned shareholder value. But let's see. Are they diluting you as a shareholder? You have been diluted 23% year over year. No. You own 23% less of the company than you did 1 year ago. How much debt do they have? Total debt, 2.2 billion. I would not buy Lucid. Anyway, let's go look at some more names here. Oh, SoFi? Yeah, that's the first time I've seen SoFi today. Let's check it out, dude. SoFi, I do own them. They're up 5% on the day. Congrats if you own SoFi, because this is a fintech. I actually really like SoFi. Let me show you this right here. SOFI. This is the part you want to watch on SoFi specifically. It's this financial services revenue growth. It's phenomenal. This is why I love them. It's up 85% year over year to a new record, incredible growth. Same with their lending revenue. It's also up 19% to a new record. And here's why people are starting to take them serious now. They're making net income every single quarter. If we zoom out, they used to lose net income every single quarter. So yeah, again, SoFi is still risky and very volatile. I wouldn't put a lot of your portfolio in SoFi, but that's one I do like and I do own. I might be biased on there. Is SoFi? Yo, what up, Deshaun? Which one is better? SoFi or M1 Finance? I think both are good. Both are good. I've never used either of those, so I don't. I say both are good, but I've never used either of those, so I don't know, to be honest. Let's see here. You trade options? I do not trade options. I have before, but I mainly just like buying shares. Some stocks are so volatile, it's kind of like buying a call option. Like this stock right here, they move like 4 to 5% a day, it feels like. So, here we go. What up, Buck? He says SOUN. Let's check out SoundHound AI. So there's some really good news and some kind of bad news about SoundHound AI. I'll go over the good news first. And this is the subscription revenue right here. Look at this. Literally a year ago, the subscription revenue was 600,000. Now it's 30 million in the most recent quarter. That's incredible growth. At this growth rate, what's it going to be next quarter? It went from 19 million to 30 million. What will it be next quarter? 40 million. So, so that's their subscription, but look at their royalties. Their high margin royalties are down 75% year over year. And if we look at the net income, here's the very worst part. They lost 250 million just in the most recent quarter. So that's not great, but I'd like to see them get net income positive, but the sales growth is there. That subscription growth is there. Um, what up? Red Crypto said LLY, Eli Lilly. Yo, this company is an amazing healthcare stock. So check this out. Here's what's crazy. They're so diversified. They basically own a bunch of different prescriptions right here. Like look at Mounjaro, for example. This one has done incredible. It's up 60% year over year to 3.5 billion. And this is Zepbound. Has anyone heard of Zepbound before? It's like the Ozempic weight loss competitor. It's up literally a year ago. The sales were nothing. It was 175 million. Now it's 2 billion in the most recent quarter, up 1,000% year over year. So anyway, they own so many mini businesses inside one. Like how's Taltz doing? Look at that. Like anyway, they're really cool. They print money. Yo, Robinhood stock. Yeah, that's ticker symbol hood right here. Check this out. So I I'm a shareholder and a customer. So check this out. Here's what I like about Robinhood. Look at this revenue growth. Revenue's at a new record. It's unbelievable. I never thought this. Over a billion of revenue. And look, they used to lose net income every quarter, kind of like SoFi. And now they're making net income every quarter. So people are taking Robinhood, SoFi, way more serious now. Oh, yo, hey, Alexander, this app right here is called Mumu. If you want to download it, it's in the link tree in my bio. It's the first link there. I love this app because, I park my idle cash here. It's free. Like, if you look in the middle of my screen, I keep my cash here. And I love all the analysis you can do. Like, someone said, yeah, Not Fate said to look at NVO stock. So, yeah, let's do some analysis on this company, for example. This is not an American stock, but look at the valuation, the PE. They're trading at 23 times net income. Look, historically, that's extremely low or extremely fair. Yeah, look, 93% of their revenue is from their obesity care products. But the best part here is the net income. It's incredible. It's up 21% year over year to $4 billion. They literally make 3 to 4 billion of net income a quarter. So NVO is a very cool stock. I am almost certain, they pay a dividend, and I'm almost certain they're doing, uh-oh, no. Hey guys. Thank you. All right. Hopefully you can hear me now on YouTube. Sorry about that. We're back now. My mic just cut out, but we're back. Anyway, hopefully I don't know where it cut off at, but what's up? We're back. Um hey, yeah, all right. Hey, thanks, Sermon. So ALAB, let's check out this stock, Astera Labs. Yo, sorry for all the issues here. If y'all want to hit the follow button, we go live every day, twice a day. I'll probably end the stream here in like 20 minutes or something. But yeah, we just look at stocks. So here's Astera Labs. Oh, my bad, Catherine. I looked at MicroStrategy a bit ago. I thought, we'll relook at MicroStrategy. So anyway, here's Astera Labs right here. Let's check out this stock. And yo, got him. Thanks so much for the lightning bolt, dude. I really appreciate that. Yeah, you got to be greedy when others are fearful. That is a great saying, Dylan. Yes, sir. So anyway, Astera Labs are here. Let's check them out. So they sell just products. How are their product sales doing? So actually, it'd be easier if we look at this down here. So yeah, look at the revenue. It's up 180% year over year to 141 million. That's insane growth. And they made net income this quarter. They really did. So that's great. Whoa. They have a phenomenal balance sheet. They have 900 million of cash with no debt. What's their market cap? They have nearly a billion of cash. So they're like 8% of the company you're paying right now is just the cash value. They have no debt at all. The net cash is like 8% of the market cap. So they're interesting. CAVA, yo, this is another restaurant right here, Kava Group. Thank you, Voice Mod. I can count on them to not work. Here's Kava Group right here. So this is let's see. Here's their revenue growth right here. This is actually the best part. For a restaurant in this environment, their sales are up 29% year over year. So that's some nice growth. And they got them. Thanks again for the another lightning bolt there. I appreciate you, friend. Um, Thoughts on Region? Yeah, let's check that one out, that one, dude. Um, Region Pharmaceuticals and um, Archer Aviation. Remind me to look at that one as well. So here's REGN. This company right here, they're a healthcare stock. Some other competitor is using their patent, and they're basically getting away with it. But Region is suing them so hard, and that's kind of why the stock is falling. I It's a buying opportunity, I think, because the valuation is dog cheap. Look at this. The PE is a 17. That's super low PE valuation. But look at this right here. So this is their main product, Isla. This is the product that basically someone's infringing on. So look at their Isla revenue. If you notice, look at that. It's down 11% year over year. Why is that? Well, they're actually growing their higher dose version of it. It's called Isla HD. If we look at this, it's up 150% year over year. So they're Anyway, I've done a lot more research than I should on this stock. The net income's so consistent. They're making pretty much, if you average it out, over $1 billion of net income every quarter. That's why the valuation's so cheap. And they just started paying a dividend. So you now get a dividend. They're doing insane buybacks. So they're a really cool company. Um, AR. Oh yeah, so ACH. Oh wait, I wanted to look at MicroStrategy as well. We'll look at that one. So here's Archer Aviation. This is a company I would avoid, and I'll just show you the number for yourself. You can draw your own conclusion, but they don't sell anything. This is a startup. If we go to their revenue right here, it says no data because they've never sold a product or a service. They've never collected any revenue. And if you go to the net income right here, they just lost 200 million in the most recent quarter. So in my opinion, I'd stay away from a company that doesn't sell anything and loses 200 million a quarter. Oh, so here's some good news. Someone said, "Oh, really, Jello? They have a partnership with Palantir. That hopefully that can they have some kind of contract where they can recognize some revenue because they don't have any revenue right now. But that would be great. Uh, that's probably good news for them." Yo, Paul, thanks so much, dude. Yeah, no problem. Yeah, if you want to hit the follow button or the subscribe button, we go live every day, twice a day. We just look at stocks, and I don't sell anything. I don't got a course, book, Discord, WhatsApp, Telegram. I don't sell anything. I don't got none of that. Watch out for people impersonating me as well. And if y'all just want to support me, the main way to support me is to subscribe to my YouTube channel. So, my TikTok account has been banned 3 times. I'm streaming on YouTube and TikTok right now. You can like replay the stream on YouTube as well. So let's see. Um, RBRK. Oh, wait, what do you think of SMR? Sorry, I saw that stock a bunch and I never got to it. Here's SMR right here. So this is a nuclear energy stock right here, but I don't. How much revenue do they do? So look at that in the most recent quarter. Look at the quarter before. This revenue was only 400,000. Well, in the most recent quarter, it was 30 million. That's incredible growth there. But yikes, they lost 180 million of net income. That's not great. Their assets just went up like crazy. Who are the shareholders? Vanguard, BlackRock. Yeah, dude. Nothing. To be honest with you, I feel bad. Nothing's really blowing me away there to really want to own that stock. If we go to the nuclear stocks, uh, VST is a great one. Um, EX actually not Exelon. I'll show you my nuclear stock. If There we go. If we go over to my Robinhood account right here, I own the largest nuclear energy stock in the world. CEG, Constellation Energy right here, owns 50% of all the US nuclear energy reactors. So this is the largest pure play if you want to get exposure to nuclear energy. So that's why I own 15 shares of them. I might be biased. I'm only up 10% on them, nothing crazy. Uh, but yeah, I own them for a reason. I really like them. Let's look at some more stocks here. Can says RBRK. What's that one? Let's check it out. RBRK. Uh, Rubrik. Okay, I've not heard of this stock before, but look at that. The stock's done great. They're up 5% on the day. They're a $15 billion company. How are their sales doing? Well, actually, let me go down here. Yeah, the revenue's up 50% year over year. Wow, that's some incredible growth. 50% sales growth. They are still losing net income, but I'm not even too concerned about that because the revenue growth is so good here. Ooh, so they have more liabilities than they have assets, and they lose net income. So that right there is not good. The largest shareholder is Lightspeed Ventures. Okay. Um, the free cash flow just jumped up to 75 million. So they beat on revenue. So actually, that's all priced in. This is priced in. So actually, investors know that they're going to lose money because I can see that right here. Look, they beat on revenue. They're even losing less than expected, and they're beating on EBITDA. So actually, I can see why this stock has done so good. You know, um, should I take my net worth out of SPCE? Hopefully, your whole net worth is not in SPCE. But yes, I feel bad if you own this one. This company literally the CEO guy, I forget his name, Hanson or whatever, complete fraud, dude. If you look in the top right, the whole company is worth $138 million. So remember that number. This whole company is worth 130 million. Well, just in the past 3 months, they have lost 76 million of net income. This company literally burns shareholder value, and they're diluting you. Wait. Yeah, Richard Branson. Yeah, thanks, Joe. Is he a shareholder here? I'm not seeing him on the shareholders, but anyway, this company, I feel bad if you own them. They lose so much money every quarter. And look, the sales are they don't sell anything. The sales were 400,000 in the most recent quarter. So I could not trust my money with this company. They just I don't see the path here. They've never sold more than like $1 million of revenue a quarter. So yeah, I wouldn't I definitely wouldn't add to the position. That's for sure. So here's Oracle right here. This is a big cloud play. Yeah, what up? Uh yeah, thanks for still being here, Dylan. Let's check out Oracle right here. So let's see. So yeah, their cloud service revenue is 11 billion in the most recent quarter. So yeah, their cloud and licensing revenue is 85% of the business. So that's most of what all their revenue is. What about the bottom line here? Yeah, wow, look at that. They're making 3 to 4 billion of net income every quarter. That's really impressive actually. Yo, got him. Thanks again for the roses, dude. You're so kind. I really appreciate you. Yo, Motive, this app I'm on right now is called Mumu. If you want to get this app, it's in the link tree in my bio. It's the first link there. Yeah, I love all the analysis you can do on here. It's a free app. Oh, and if you look in the middle of my screen, it's where I like to park my idle cash. Um, I have multiple apps here. I use Robinhood, I use Webull as well, but this app right here is the most useful for analysis, I think. Um, let's see. Let's look at some more stocks. MPW, brother. Yo, I feel bad if you own MPW. So this company, if we look at them on the weekly, if you're wondering what happened here, so this company owns the land under a bunch of hospitals. So think about that. They own a land under a bunch of hospitals, so they have a bunch of tenants. One of their hospital tenants could not afford the rent anymore, and so MPW sent them a loan and then they defaulted on the loan and they just lost so much money on this. Look at their net income every quarter. This is what's crazy. They're losing like I don't believe it. Like hundreds of millions every quarter. If we zoom out, look at that. They used to make so much money. So and look at that. The main reason people are buying them is for the dividend, the 7.6% dividend, but I think it might even have to get cut again. So in my opinion, I'm just staying away from MPW. Um, like there's some better office hospitals like HR, for example, Healthcare Realty Trust. This one, BlackRock owns a bunch of them. But this one has wow, a 7.4% dividend. I think this one's a bit of a safer play. But dang, they're still losing money as well. I don't know. I don't know if I my highest yielding dividend stock, if I was looking for one, I'm just buying ticker symbol Cube right here. This is Cube Smart. They have a 5% plus dividend yield and it's completely sustainable. I've made a bunch of YouTube videos about this stock if you want to check it out. VOO or SPY. Yeah, Dylan, VOO I'd pick. It doesn't matter because they have the same expense ratio. But yeah, I just buy VOO. Again, this is just the S&P 500. Breaks your money up for you into the best companies: Apple, Nvidia, Microsoft, Amazon, Meta. Invest in what you use, and I use all that. CubeSmart does self storage. They're a real estate company, and I've gone over their investor presentation. It's extremely impressive. Self storage is I love that industry. It's recession resistant. Whenever there's inflation, the self storage is month to month lease. You can easily capture the inflation. Tenants are incentivized to pay. You have their stuff. They're sticky tenants because are you really? A lot of people don't want to go rent a U-Haul, grab a friend, go empty their self storage unit. And anyway, they're the largest player in New York for self storage. Anyway, I've done too much research on CubeSmart than I should. There's certain New York took away tax incentives for self-storage properties, so literally there's no new competition for CubeSmart in their main market. Anyway, let me get off of them. If go watch my YouTube video. I made so many YouTube videos about CubeSmart. Just type into YouTube like Nathan Robert CubeSmart. My YouTube channel is also in the link tree in my bio. Anyway, here's IEP. This company right here. I used to own them. I lost a lot of money on this stock, and not only did I lose a lot of money on the stock, I lost a lot of money because they're not a stock. This is actually an MLP. They're a master limited partnership. And what that means is they literally send you a K1 tax form at the end of the year. No other stock does that. And I didn't know that. So I bought this stock. I bought like $100 of the stock. I kid you not. And then I got sent a K1 tax form and it costed me $300 with an accountant to get it filled out. So anyway, don't buy this stock for the K1 tax form. And don't buy this stock because of Carl Icahn. He dilutes the life out of the shareholder and they just don't make any money. Look at this. They made 80 million last quarter, but look at all the other quarters. They lost 500 million, 100 million, and this company has an insane 37% dividend, and the dividends just get cut. Please don't buy IEP. Anyway, I kind of ranted on them because I lost money on them. Sorry. Dylan said MNR. Again, this isn't financial advice. They that stock could double. I really don't know. But none of this is financial advice. Always do your own research. But here's MNR, Mock Natural Resources. Not heard of this one before. They have a 20% dividend yield. That, well, here's the good news. They're making net income every quarter. So they're definitely not, losing money. So the sales are up 3%. This is like just an oil and gas stock. So yeah. Um, looks like they IPO'd a year ago. So they haven't even been public for that long. So I'd have to do some more research on them. They haven't been out too long. Thank you. I'll put quite a bit. Should I sell? Yeah, I, I maybe wouldn't sell my MPW or I wouldn't add more money into MPW. I don't know how much of your portfolio it is. If MPW is like 2% of your portfolio, I wouldn't worry about it. But I wouldn't put a huge chunk of my portfolio with MPW. I just couldn't trust them. If I honestly, if you're looking for the highest yielding dividend stock, you MPW had a 7% dividend. They don't pay a qualified dividend anyway. Here's another one that has a very sustainable higher dividend yield. This is JEPQ. It's run by JP Morgan, ETF. It has a 10.5% dividend and they pay you monthly. So you get a monthly dividend. It's completely sustainable. All they do is sell calls on the NASDAQ. You could do it yourself even, but I trust JP Morgan to do it for me. Again, not financial advice, but if you notice the dividend, it changes every quarter based off how much money they collect in premiums. So yeah, maybe I'd consider sell MPW and buy JEPQ if I'm looking for just the highest yielding stock possible. So JEPQ actually has a sustainable 11% dividend just because of the nature of selling calls. But you will not outperform the market owning those stocks. You will not outperform the market owning JEPQ. You're just maximizing your dividend income. Anyway, let's keep going here. Blue. This is not financial advice, but yeah, don't buy or sell anything just because I said it. You could lose a lot of money on a stock. Like, look at this right here. We bought this stock. We dollar cost average into it, but we still lost a lot of money. You want to make sure you have a diversified portfolio. Make sure you're buying high quality stocks. So yeah. What do you think of HelloFresh, dude? Oh, I'm making a TikTok soon about HelloFresh. Let me find that stock. I added it to my watch list not too long. Oh, I'm on the wrong watch list here. That's why. Um, let's see. Let me. Here's my watch list. Where's HelloFresh? I added that one not too long ago. LAZR is down 21%. Dang, this is the stock I'm considering shorting. Even though the stocks at all time, it's so hard to short stocks that are down because it doesn't take much to move them. Dude, I cannot find HelloFresh. I swear I just added that to the watch list. It's not an American company. Uh, oh, here it is. Okay, HelloFresh. Has anyone heard of them? They're like that every YouTuber used to be sponsored by them. They're only worth $1.3 billion now. So that's not great. And look at that. They pretty much lose money every quarter. So HelloFresh is going bankrupt. They're a European company. If we switch it to USD, yeah. Yikes. Yeah, I wouldn't buy them. It's kind of like, it reminds me of Blue Apron, dude. Blue Apron stock. I used to own Blue Apron stock. um, NBIS. Yo, let's check. That's Nebius. I believe this company is owned by Nvidia. They just fell like crazy. I'm not sure what happened here. The stock went from 84, now it's at 24 or 29. I mean, but they're in a lot of niche industries. Like look at that e-commerce, mobility, search, and portal. So they're in some niche industries. They're losing money right now. Like in the most recent quarter, they lost 100 million. Um, yeah, the sales were only 37 million. Like it looks weird. Like why was it 9 billion and then only 37 million? It I don't know about Nebius. I just got to do more research on that one. Let me go back to Nvidia's portfolio right here. Nvidia, the stock owns some individual companies. Yeah, they own ARM, APLD, and yeah, Nebius, NBIS. Oh, look at that. They bought WeRide. Yo, ultimate like pump and dump. Look at that. Nvidia took a stake into WeRide. The stock jumped up to $42, and now it's all the way back down to 16. It like sold off the whole rally. I was thinking I need to trim my position. Yo, what up, Motive? Yeah. Um, What a legendary pool. Hey, I appreciate y'all being here. Yeah, if y'all want to hit the follow button, we go live every day, twice a day. We just look at stocks. I don't sell anything. Oh, wait, Ron Washington said ASTS. Let's check it out. And yo, what up, Jack? IONQ. We'll check out both of those. Yeah, thanks for showing up to the YouTube live stream. I'm streaming on both YouTube and TikTok right now. If y'all want to support me, go watch the stream from YouTube. Um, and my YouTube channel is called Nathan Robert, Linktree in bio. And hey, yo, Blue414. Thanks. No way, 25 goats. Thanks for the 25 roses, dude. I thank you so much. So here's ASTS Space Mobile. They send a lot of rockets into space. Look right here. Right now, they don't have much revenue, but look in 2 quarters. The revenue is expected to jump up. They're about to recognize some contract. Because right now, to be honest with you, nothing's really blowing me away here to want to buy them. Because in the most recent quarter, the sales were only 1 million, and they lost 50 million, 300 million the last quarter. The balance sheet's great, but I would I would rather buy, honestly, instead of ASTS, if you're looking for like a space stock, no, since I send rockets into space, check out Rocket Lab. They have a $1.2 billion backlog of orders, like orders they can't fulfill yet. And look at their space systems revenue growth. This is what's incredible. That's why I like them. It's up 75% year over year to a new record. It's incredible. Oh, yo, mate, Jay, this app is called Mumu. If you want to download it, it's in the link tree in my bio. First link there. Yeah, I love all the analysis you can do on here. Oh, and IONQ as well. Yo, that's on the quantum watch list. Yo, let me go back to the quantum list here. To be honest with you, my favorite quantum stock is Google. Google has the money and the talent to be the industry leader. But IONQ's, they're a smaller one, 5.7 billion. Let's check them out. So they're up 15% on the day. Yeah, congrats if you own them. Here's the good news. This is the best part about IONQ. If we go look at their sales right here, it's up 91% from the previous year. That's incredible growth, 91% sales growth. But the revenue isn't too much right now. So that's the good news. The good news is the sales are growing like a beast, but the net income isn't great. They're still losing money right now. So that's what you got to be careful of. They're still losing money. So yeah. Thank you, TikTok. Hold on. There we go. All right. So yeah. Microsoft, Google, they both make their own quantum chips. So they're Honeywell as well, IBM, those are other quantum names. Look at the 120-day return for the quantum list is 127%. That's crazy. Uh how's uh how's Nancy Pelosi's portfolio doing? Hers is 11% anyway. Let's look at some more stocks here. What do you think about AVAX? Is that a stock? I think that might be a crypto. AVAX. So this is Avalanche. So yeah, they're up 9% on the day. I can't really give you any thoughts on this. Like, there's no revenue I can go and look at for you here. So this is just momentum. But nice, they're up on the day. That wasn't too much help. I apologize there. I saw you mention the goat Nancy Pelosi. So could Disney be a good buy? Yeah, Disney could be a good buy, and I do own them. I'm up only like 5% on them. This one, politics aside, Disney is decent. It's not great. Like, look at them on the weekly. This this is what's not good about this stock. Look at them. Disney is lower than it was in 2018. So this stock has done nothing for the past 10 years. But they own a lot more than they used to. In 2019, they didn't own any streaming businesses. They own ESPN, Hulu, Disney Plus now. And they own a bunch of cruise lines. The cruise lines are stupidly profitable for Disney. And how do I know that? If we look at Royal Caribbean, wait, what's the I won't be able to find the ticker symbol, will I? Oh my gosh, Royal Caribbean. I don't know the ticker symbol. RLC. Can someone find it for me? RCL? Royal Caribbean. We found it. Look at this. This is a boring cruise. This is Royal Caribbean right here. And the stock is pretty much at an all-time high. Look at the net income they make. This is what I assume the Disney cruise lines are going to look like. They make so much net income every quarter. It's for a cruise line to be making net income every quarter like this is really impressive. They also pay a growing dividend. So Royal Caribbean's, I like them more than the airlines. If I was going to buy cruises or airlines, I'd much rather buy a Royal Caribbean than a Delta airline. Both still, again, if we go into a recession, cruise lines, airlines, they're just going to get destroyed. Um, Let's see. Yo, what up, Riley? CENX stock. Nike is a legendary long term. Might be acquired. Yo, I don't think Nike will be acquired. They're like already $100 billion company, unless Elon Musk buys it. Wait, let me look at CENX first. Then I'll show you my thoughts on Nike. So here's Century Aluminum. So they just sell a commodity, I'm guessing. Yeah, so look at that. The price to sales. So not even the price to net income, but the price to revenue is a 0.8. So the company is trading at a ridiculously low valuation. That's because they literally sell the most basic commodity ever, aluminum. So yeah, they are making net income though. Look at that, 40 million, 40 million. So they're overall they're net making money, which is a good sign. So but again, I don't see you're not going to outperform the market probably owning aluminum. Yeah, I don't know. The stock's done decent though the past year or the past couple years, but it's so cyclical. Like, yeah, so here's all right, yo. Let me show you Nike. I feel bad. I might get bullied here, but I sold all my Nike, bro. So look, I used to love this stock. I was buying it like crazy, buying the dip, but then I decided to sell all my Nike up here. Let me show you why. I didn't realize this, but I had looked at the analyst expectations of their net income. It's plummeted. Look at next quarter. They're expected to just make 12 cents of EPS, which can't even afford the dividend. The dividend cost 40 cents. Well, look at their footwear revenue. Again, Nike sells shoes, footwear. It's down 12% year over year. So the shoe sales aren't doing great. And so is the net income. The net income is down 33% year over year. So Nike's a great brand. They're not going anywhere long term, but they just sell a commodity. It's like, and they can't even afford the dividend next quarter. So it's like, it's really tough to buy their own Nike. So that's why I decided to sell them. I was just having I ha I ca I love Nike. I have a Nike shoe collection. I when I own Nike, I have more Nike shoe value than the Nike stock. I have so much emotional attachment to Nike stock, but I sold it anyway because I have to be disciplined. Again, not here's one I'd rather buy Crocs than Nike right now, and here's why. Crocs stock actually has some growth to them. But the valuation is so low on Crocs. You know, they own Crocs and they also own Hey Dude. Has anyone heard of Hey Dude before? It's like another kind of shoe. But anyway, look at the net income right here. The net income on Crocs is actually up 45%. You know, the net income on Nike was down 12%. Oh, hey, Derek, this app I'm using is called Nike. Oh my gosh. This app I'm using is called Moo. It's in the link tree in my bio. It's the first link. Yo, I've been live for almost 2 hours. My head is hurting. If y'all want to hit the follow button, we go live every day, twice a day. I'm about to end the stream here. So when I hit the 2 hour mark, my brain starts to hurt. Um, I've got Hey Dudes sell everywhere. Hey, oh, nice Jack Martin. Yeah, dude, I have a pair of Hey Dudes. So does my dad. He likes them. Yeah, so the net income's up 45% year over year. So yeah, that the net income just beat like crazy in the most recent quarter. So yeah, Hey Dude is 20% of their business now. So anyway, Crocs is cool. I sold my Amazon shares. Yo, you sold Amazon? Yo, I mean, I guess if you were gonna sell them today would be a decent day because they're up 3%. But I, I'm just gonna hold on to my Amazon, dude. I trust my money with Amazon over the next 10 years. You know, Amazon is so innovative. They own so many businesses inside one. You know, they own Whole Foods, the AWS business. You know, that's the most valuable part of Amazon, if y'all don't know. The most valuable part of Amazon that makes the most money for them is their Amazon Web Services. You know, they own Twitch, they have advertising revenue. Yeah, here's our portfolio on the day. Our main taxable account is up 1.95%. Again, if we go to year to date, you know, we're still down 3.6% year to date, but today is a nice little recovery. Pretty much every stock that we own is up except for McDonald's there. Uh, but yeah, how's y'all's portfolio doing? And yeah, here's our Moomoo portfolio. We're up 3.3% on the day in here. Let's go. Hey, I've copped that straight away. Hey, yeah, good. Thanks for yo motive. I'm gonna give you a follow. Thanks for the support. I appreciate you. So let's see. Thoughts on Tesla? Yeah, Brian, let's check out Tesla stocks. So Tesla right here, they're up 10%. They're up over 10% on the day now. That is nuts. So let's see right here. There's good news and there's bad news about Tesla. Here's the bad news. The automotive business, their main source of revenue is down 5% year over year. So that's why I think it's hard for a lot of investors to pay a high valuation for Tesla and see literal negative growth on their automotive business. But here's the good news that not a lot of people talk about. The hidden gem of Tesla is their energy business. Look at this for the full year 2024. It was up 67%. Look at them on a quarterly basis. It's up 112% year over year. Ridiculous. So Tesla, that's one good news for them. But the valuation is too high. For me to own personally, I could not pay Tesla's valuation. When I look at Meta and Google and then compare it to Tesla, dude, I'm like, Tesla makes Google look like a steal. Um, Too many foreign countries cracking down on Tesla. Yeah, yes. Some people, that a lot of people are saying Elon's politics are hurting the stock now. That's from what I heard. 50K day today. Really, Nicholas, dude, that's more than my whole portfolio. That's awesome, man. Uh, don't forget Tesla. Yeah, the robotics. Yo, Tesla has the like humanoid robot. I forget what they're called. What's the name of that? I forget. Yo, Bobby, what's up? Bobby says BBAI stock. So this is Big Bear AI. You know, this company just dropped in the most recent quarter, and I think rightfully so. They're up 13% on the day, so that's good. But look in the top right. This whole entire company is worth 950 million. So remember that this whole entire company is worth 950 million. This is why I think the stock sold off. Just in the past 3 months, they lost 100 million. So that's literally 10% of the company they lost in just 3 months. And that doesn't even include the other quarters. The quarter before 12 million, another 100 million. So that was the bad news, that they're losing a lot of money right now, way more than investors expected. And look at the revenue as well. The analysts were expecting 54 million of revenue. They only had 43 million, and they lost way more net income than expected. So I think that's why the stock really gapped down here. So honestly, I'd be careful with Big Bear AI, because nothing. The sales are up 8% year over year. I mean, nothing's really blowing me away. You look at that, their liabilities just went up. Their liabilities are the same as their assets now. I'm not trying to bag on anyone's stock. I just be careful with that one. I wouldn't put a lot of money into that one. That could be a fun swing trade, not like a buy and hold forever kind of stock. Yo, Dylan, is now a good time to buy VOO, dude? It's always a great time to buy the S&P 500. I think so. Even buying on green days it'll work out in the long run. If you just plan to hold the S&P 500 forever, yes, sir. So would you buy Google or Tesla? You know, I'm probably biased because I own Google, but here's why I love Google. So remember, Tesla's trading at over 100 times net income. Well, here's Google. They're trading at 21 times net income. That's lower than the S&P 500's multiple. That's historically very cheap. And they're trading at, look at that, they're trading at a low valuation, and their net income is growing. Look at Google's net income. It's up 28% year over year to $26 billion. And annualize that, that's over 100 billion of net income a year. And they have so many mini businesses inside one. Google owns Android. They own YouTube. Obviously, they have their Google Cloud business. Like, look at just their Google Cloud revenue. It's up 31%. That's 12 billion of revenue just in one quarter. They own Waymo. Has anyone heard of Waymo before? They have their own quantum chips. So anyway, Google is, you don't trade Google. You should, in my opinion, just buy and hold that one for the long run and forget about it. So, and they pay a dividend now. They do crazy stock buybacks. This is a quick lesson, dude. Buybacks are so important. I'll be really quick about this. If you're wondering, like, hey, why is like Google stock done so good? Like, why does the stock appear like it never goes down? Well, remember this. They made so I'll be quick. They made 26 billion of net income in the most recent quarter. What is Google doing with 26 billion? Well, look at this number specifically. This is the amount of money they're spending every quarter buying back their own stock. Google spends $15 billion every quarter buying back their own stock, so there's less shares outstanding, giving you more ownership in the company. Tesla does not do any stock buybacks. Tesla's actually diluting you. When with Google, you own more of the company every year, plus the dividend. They're a very shareholder-friendly company, and they're growing. So anyway, that's why I think even Meta's in the same boat as Google. And I own both of those. So full transparency, I might be biased. Look at that. I got 16 shares of Google, and I also got 4 shares of Meta. Advertising giants. Waymo will be huge. Yeah, dude. Waymo's is like Uber's competitor. They're coming for Uber. I'm bullish on Uber though. Uber should kind of benefit as well from the autonomous driving. Biovance Therapeutics options. Yo, what's the ticker symbol for that one? I can check it out. Yo, let's see. I have a lot of VFIAX, then some Shopify, Tesla, Marco wasn't great. Oh, yo, actually, let's go over Shopify here. That's a really cool company. They're really taking market share. This is a Canadian company. Look at the growth of their sales. This is the best part. Look at their annual revenue. You know, in 2019 it was 1.5 billion. Now it's 9 billion in the most recent quarter. Yo, how many Mr. Beast videos are sponsored by Shopify? All of Mr. Beast's websites are actually used by are Shopify websites. And I used to have a Shopify website. And every time you'd sell something, you'd have to pay them like 0.25% of the sale, no matter what. Even Mr. Beast has to do that. But anyway, they're incredibly profitable now. They made $1 billion of net income in the most recent quarter. Look at the FCF, which is free cash flow, 600 million of free cash flow in the most recent quarter. So anyway, Shopify, in my opinion, is just a great growth company. Oh, and I forgot to look at their balance sheet. Dude, Shopify has this insane balance sheet. It's crazy good. Yo, Music is Live said, what are your take on Lucid? I'll be quick about this one because I'm going to say don't buy Lucid, stay away from them, and I feel bad if you own them. They've diluted you 30% year over year. So you own 30% less of the company than you did a year ago, and they diluted you as a shareholder when the stock was at $3. So anyway, that they diluted you, and check out the net income losses. They lost $1 billion last quarter, 400 million this quarter, and the whole company is worth, let's see, they lose around 3 billion a year, and the whole company is worth 7 billion. So in my opinion, Lucid is going bankrupt, and I think the stock price will just slowly keep on going lower. That's the sad reality. Maybe the Saudis will bail them out, but I really don't know. That's one I don't trust long term, dude. Oh, Monkey D. Luffy says, is Apple buying back stock? Apple is the only other company in the world doing more buybacks than Google. There's no other company in the world doing more buybacks than Apple. Dude, why can I not type in Apple? There we go. So let me show you this right here. Here's what, Apple, the world's largest company. Look at the net income. They made 36 billion of net income just in the most recent quarter. Let's see how much Apple's spending on buybacks. Look at that. They spend, dude, 25 billion a quarter. They spend slightly, or not slightly more, a lot more. They spend nearly 100 billion a year. Apple spends $100 billion a year buying back their own stock. And it's always been that way. Look at this. If we go back to 2020, this is why Apple stock just compounds over time. They bought back a bunch of stock, and like when they spent in 2020, 20 billion buying back their own stock, that gave so much shareholder value today. Like they bought back 10 billion of the stock when it was at $80. Now it's at 220. So anyway, that's kind of why these high tech stocks just don't go down, dude. The shares outstanding go down, and it gives you more ownership. The EPS goes up, the free cash flow per share goes up. Well, let's look at some more stocks here. Sermon, what's up, dude? Lyft. Let's check out Lyft. We'll look at Yeah, we'll look at Roku. Remind me to look at Roku and Netflix. Serve, remind me to look at Netflix. I want to get to that one. So Lyft right here, this is Uber's competitor. Lyft does what Uber does, but Lyft doesn't do like Uber Eats. Lyft only does like human, whatever. Look at the free cash flow. They're making a bunch of free cash flow now, over 100 million a quarter easy. And look at the net income. So this company used to lose money for the longest time. They lost so much net income every quarter, but now for the first time, they're cranking out net income, 60 million in the most recent quarter, and that trend is just expected to stay. They're supposed to stay profitable. So anyway, they have dramatically underperformed, Uber. Just watch your video about Uber. Yeah, Danny, dude, the Uber's great. With the Grab acquisition, was genius. What's up, Danny? How's it going? So anyway, here's Netflix stock right here. Netflix deserves all the hype. They're an incredible company. Check this out. Look at their premium subscribers. It jumped up from 282 million to 301 million. That's an incredible jump, That was mainly from that terrible Mike Tyson Jake Paul fight. But anyway, look at the profits, the bottom line here. It's crazy. They're making 2 to 3 billion of net income every single quarter. So the net income is crazy good here. So yeah, that's one. Dang, instead of paying for Netflix every month, I should have been buying the stock every month. Hey, Brandon, how's it going, man? Let's check out Spotify. Yeah, hey, if you guys want to support me, I'm streaming on YouTube and TikTok. So if you want to support me, head over from my TikTok stream and go to my YouTube channel. I'm streaming on there. You can watch the stream back if you missed something as well. And it helped me out because my TikTok account has been banned so many times, like literally permanently banned 3 times where I can't even log in. And it's been unbanned 3 times. So I'm scared it's going to get permanently banned. So if that does happen, check out my YouTube channel. Anyway, let's check out Spotify. This is another one, dude. Netflix stock is at all-time high, and so is Spotify. Another subscription company. I should have bought the stock instead of buying Spotify every month. But check this out. We can see their monthly active users. Last quarter it was 640. Now it's 675. A huge jump of their monthly active users. What about the free cash flow? Wow. 912 million of free cash flow in the most recent quarter. And the net income was 400 million. Dude, Spotify is incredibly profitable now. And this is all like reoccurring revenue. I love their business model. It's look, here's their premium revenue right here. Look at the premium revenue growth. It's up 13% year over year. So nice. They're still growing. They're a EU company, I believe. They're always working with EU to find Apple. Do I buy Google C or A? It does not matter. Me personally, I own GOG. Mm. This is the non-voting class shares. Yeah, thanks, Jello. Yeah. I'm never gonna vote, so I just buy GOG. It literally does not matter. Both of the stocks perform the exact same. There's no You could still buy GOGL and not vote. It doesn't matter. It doesn't matter. Yeah, Spotify has a ridiculous PE ratio. That's because if you actually, that's a good point. If you're wondering, like, hey, why is Spotify's valuation extremely ridiculous? Well, if we go to their net income right here, they pretty much just went net income positive. Yeah, the valuation, honestly, the valuation is really expensive on Spotify. I would not pay it. But you kind of, it's so forward looking. Like, look, the net income is expected to grow like crazy the coming years. It's just expected to keep on growing. So that's why they have a high valuation. I'm still not buying them. Um, let's see. Oh yeah, Sermon, what's up? Let's check out Neo. So this company I would avoid as well. This kind of reminds me of like Lucid. This is a Chinese one though. So here's their vehicle deliveries. It looks like it's 13,000. But anyway, this is the bad part. Look, they literally lost a billion just in the most recent quarter. I mean, they lose so much money every quarter. They just burn shareholder value. That's why I would stay away from Neo, and that's why the stock has done so bad. They just can't get profitable. And that's why I can't trust my money with this company. Because they just lost a billion just this quarter, and how much are they worth? 9 billion. So they lost literally 12% of their market cap just in 3 months. Yay, what up, Poe? CELH. Let's check out Celsius. So they just bought Alani. Has anyone heard of that energy drink company? That's an attempt to revive the growth. So Celsius has lost their growth, but they're buying Alani to bring it back, hopefully. Because if we go to their sales right here, the revenue is down 5% year over year. That's why I think the stock has, kind of plummeted and went from 95 to $30, rightfully so, because the growth is now negative. And same with their profits as well. This is not good. The net income just went negative 18 million. So I understand why the stock fell so much, but the good news is they have no debt at all. Celsius is a debt-free company. Part of that was Pepsi's supply chain fault, but they're debt-free. They have 900 million of cash, and they just bought Alani. Actually, after the Alani acquisition, I'm not sure how much cash they have left, but anyway, it's like a mixed bag there on Celsius. Can you check out Golar LNG? What's the ticker symbol 29? I can check that out. Maybe if I type in Golar. Actually I found it for you. I got you. So yeah, look at that. They're up 6% on the day. Yeah, congrats if you own them. Let's check out the floating liquefaction natural gas. So the revenue's flat year over year. That's probably just because of the price of natural gas has been flat. But let me go to the net income. Uh, yeah, so I mean, they lost money last quarter, but if you average out the 4 quarters, they are net making net income. And you get a 2.5% yield. Looks like you get $1 per share now in dividends. So, hey, not bad. So, that could be a way to get exposure to natural gas. Uh, let's see. Oh, yo, Tyler said QQQ. Yo, there's the QQQ ETF, but I recommend don't buy QQQ, buy QQQM. It's the exact same ETF run by the exact same people with the exact same holdings. I promise, do your own research. I promise this, but do your own research, obviously. But I'm not financial advice. This is the exact same thing as QQQ, but with a lower expense ratio. They just market QQQ to get everyone to buy that one with the high expense ratio. So anyway, same holdings as the QQQs, Apple, Microsoft, Nvidia, great companies. Hey, thank you, XZR. Thanks for the compliment there. Yeah. Hey, if y'all want to follow me, we go live every day, twice a day. We just look at stocks, and I don't sell anything. I don't got a course, book, WhatsApp, Telegram. I don't got none of that. I'm just on here giving my opinion. So yeah, I'll show you Rivian too. So Rivian, I technically own Rivian because I own Amazon. So if we go to the largest shareholder here, if you own Amazon stock, you technically own Rivian because Amazon owns 14% of this company, which is pretty cool. So I too technically own a little bit of Rivian, but here's why I probably wouldn't own Rivian individually. They still burn money right now. I mean, they did only the trend is getting better. They only lost 740 million in the most recent quarter. That's still a crazy amount, but yeah, they pretty much lose $1 billion of net income a quarter, and the whole company is worth 13 billion. So this stock kind of deserves to be where it's at right now. The valuation is probably even a little bit expensive right now. I just really like to see them get net income positive. What do you think about the oil and gas industry? Currently bullish or bearish? Yo, I mean, I think it's always good to have a little bit of exposure to oil and gas. Yeah. Hey, you're Canadian. That's what's up, man. So if we go to like Warren Buffett's, like Warren Buffett, for example, he loves oil. He has Chevron, he has OXY, Oxy Petroleum. Like Chevron, for example, I think it's important to have you want to have like 4% of your portfolio in oil. You don't want to have 10% of your portfolio in oil, but oil does good whenever there's inflation and whenever there's war fears. So look at Chevron, for example. And on top of that, these oil stocks have high dividend yields. So look at that. You get a 4% dividend qualified with Chevron. So yeah. Plus the stock price appreciation is pretty decent. Oh yeah, looks like dude, Nancy Pelosi's portfolio. She's been buying the dip on CrowdStrike, Netflix, PayPal. Let's see. Would you start with Chevron or drill for? Chevron's a great one. EOG is a great one. ExxonMobil. ExxonMobil, this one has a bit more growth to them. They have a lower dividend. They have a 3.3% dividend. All right. What up? BFRG. What's this one? Bullfrog AI. Yeah, what up? Bobby, let's check this one out. So this company looks extremely risky. Like if you look in the top right, they're only worth $17 million. That's extremely risky. A $17 million company. I would not trust any money with them. But yeah, they don't sell anything. They don't have any revenue. They lose $1 million a quarter. They have a decent balance sheet, but I mean the assets are $5 million. So anyway, yeah, just stay away from this stock. I mean, that one's just a small cap risky company. Hey, Ethan, really nice to see you, man. Let's check out Build-A-Bear Workshop. Dude, I actually own that stock here in my Roth IRA. Check this out. I own 8 shares of BBW. Hey, that stands for Build-A-Bear Workshop. That's their ticker symbol. Don't report me, but look at that. In the past 5 years, they're up 1,700%. And look at that, I'm actually down 1% on my shares. So anyway, I do own them just because the valuation is so cheap. They're literally trading at 10 times net income. So remember, Build-A-Bear Workshop, the whole company's worth $500 million. Remember that. The whole company's worth $500 million. They have no debt. And look at the most recent quarter. They made $21 million. So think about that. They made $21 million and the whole company's worth $50 million. I mean, and that's just one quarter. So it's like a weird way to think about it. I'm basically getting like a couple percent of my money back every quarter if I buy the stock. I mean, I have a bunch of YouTube videos about that one. They're still really risky though. Oh, hey, Hayden, this app right here is called Moomoo. If you want to download this app, it's in the link tree in my bio. It's the first link there. Yeah, I like to park my idle cash in here. Like if you look in the middle of my screen, I like the cash yield and all the analysis you can do. Like someone said, oh, AIQ. What up, Derek? AIQ. Let's do some, oh, this is an ETF actually. So I'll give you some analysis on them. What are their top holdings? Although it's Tencent, Alibaba. So this is, some of these are like international. Yeah, Alibaba, Samsung even. Yo, Samsung is publicly traded. And yeah, Tencent, if you're wondering what Tencent is, they own a bunch of popular games like PUBG, Fortnite. This company owns 50% of Fortnite. They own PUBG. So Tencent's a cool one. They're Chinese owned though. Or they're a Chinese company, but that's my favorite Chinese stock of all time. Yeah, I just bought a Canadian one. Owns the most oil land in Alberta. Was curious. Yo, what stock is that one? I can check it out. Oil Field says P&G stock. Let's check it out, my friend. Wait, are you talking about Kraken Robotics? Wait, he says Pangolia. I can't find that one. Or is that the name of it? Or are you talking about that robotics company? Marriott or Hilton stock? Yo, this will impress you. I feel like I own Hilton. HLT stock. This is why you guys won't believe this. So I'll be super quick about this. Look at the total common shares outstanding. So this company literally, it's on the left here. It's the most recent quarter. They buy back 5% of the company every year. So no matter what, or not no matter what, but pretty much every year, this company buys back 5% of the stock. They could, if they instead did that on a dividend, they could give you a 5% dividend, but they're choosing to not give a huge dividend, but to buy back their own stock. So that's why the stock has done so good. They literally just buy back 5% of the company a year. So the way you could think about it, you get 5% of your money back at minimum with this stock right here. So anyway, I mean, not financial advice. You could lose a lot of money on a stock. Like again, look at this portfolio. We're down 11% all time in here. We've dramatically underperformed the market. So this is a financial advice. Don't listen to me. Been thinking about that one because of you. Hey, what up, Ethan? Yeah, dude, Ethan, I would have put a lot of money into Build-A-Bear. That one's still really risky, but I like having those risky stocks like SoFi Technologies, Robinhood. I have a couple $100 in them just because they're risky, and I like having just a small exposure to them. Um, oh, it's on the TSX, so you can't see it. Oh, it's on the that sucks. AFRM. Hey, what up, Mercutio? This is the buy now, pay later stock. Klarna is about to IPO, but check out Affirm. This is another buy now, pay later company, and they just went profitable. So check out their net income. For the first time, they made 80 million of net income. If we zoom out, they just used to lose so much net income. I actually used to own that stock. I made a lot of money on that stock, actually. I wonder if I think I sold it for lower than it is today. Where did I sell this stock at? I, or maybe it was back here. Oh, it was way back here. So check this out. How many shares did I had 9 shares. I sold it at $50. I'd like tripled my money on that one. Anyway, congrats if you own them, because I want to see that stock do good. They're finally now net income positive. But if we go into a recession, the buy now, pay later stocks will get smoked. People just won't pay back those loans. TSLQ or Tesla? So, I would just buy TSLA, the actual stock here, if I had to pick one. Look at that. They're up over 10% on the day. I bet the shorts are not happy right now. But hey, who was shorting Tesla after that huge decline? Anyway, I'll go over the good news and bad news about Tesla. Here's the bad news. Tesla lost the growth of their automotive business. It's down 5% year over year. So that's why a lot of investors can't pay. Tesla's trading at over 100 times net income. How are investors supposed to pay a huge premium for a company that's not growing anymore? But here's what is growing, is their energy business. This is the one hidden gem thing I like about Tesla. Look at that. It's up, 67% year over year. For the full year 2024, it's incredible. On a quarterly basis, it's up 112% year over year. So that's the good news, but the valuation is still high for me to pay. Um, they lost Walmart. Yo, Music Spot. What stock were we talking about there? What do you mean they lost Walmart? I forget what we were talking about. Is this in one of your YouTube videos? Hey, yeah, what up, DT? Yes, sir. We are also streaming on YouTube. Hey, we're streaming on YouTube and TikTok right now. So if y'all want to go back and rewatch the stream, or if you missed something, you can go back. The live streams stay there forever on my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. You can find it there. Affirm lost Walmart. I think Affirm partnered with Amazon. Oh yeah, so they're with Klarna now. Anyway, let's see. Oh yeah, can we look at Dutch Bros stock? Yeah, let's check it out. So this is Dutch Bros right here. This is a restaurant. I've been there once. When I was in Arizona, I did go to a Dutch Bros. So look at that. 91% of the revenue comes from their company operated shops, and it's up 39% year over year. So for a restaurant in this, rough environment to be growing, that's incredible. 39% growth. I wish McDonald's was growing like that. But look, the net income is crazy. They're making so much net income every quarter. Same with free cash flow. In the 2 most recent quarters, look at that. The free cash flow just exploded. So that's the good news about Dutch Bros. Um, Imagine buying Tesla for the automotive side. Yeah, dude, actually, that's true. Almost every Tesla investor is buying them for like the automotive FSD business. Uh, EPS on Tesla is down for. Yeah, dude, the net income is down bad from all time high. Yo, Brian, what's up, man? He said Broadcom. Yo, Broadcom is super impressive, bro. I'll give you my quick analysis on them. So check out this. A lot of people know them for their semiconductor solutions, but check this out. Look at their infrastructure software business. This is crazy. Literally in 2023, it was 2 billion. Now in the most recent quarter, it's up 50% to 6.7 billion. That's a ridiculous amount of money. And look at the FCF. Look at the free cash flow. They made 6 billion in free cash flow just in the most recent quarter. So incredible growth, up 28% year over year. So hey, I appreciate you, Ethan. Thank you, man. Yeah, if you guys want to hit the follow button, we go live every day. I'm actually going to end the stream here in a little bit, but we will be live later today. That's for sure. We've been live for well over 2 hours now. My head's starting to hurt a little, so I'll bang through a few more stocks here. Yeah, let's go Nike. Yo, Nike stock. I actually just sold all my Nike shares. You can see where I've been buying them, but I did unfortunately sell out of all my Nike at 79. Actually, I guess fortunate for me, that was the good move. Dang, Nike's down on the day. Like every stock is up today, but not Nike. I feel bad if you own Nike. I really do. Like the thing with Nike, they lost all growth. Look at their net income. Their net income is down 32% year over year to only 700 million. That's not great. That's why the stock collapsed, and it's supposed to get worse. Let's see. Do you think Elon wants it to crash so he can take it back and go private? Oh, I don't know. I don't know. Um, That's an interesting thing. Can you check TRK Speedway? What's that one? Wait, is that the ticker symbol? I can't find that one. Um, Let's see. Nathan is cool German. SAP stock. Yeah, that's a huge software name. Check this out. This stock is literally at an alt. Look at them since 2019. I mean, they've done incredible. Let me go check out. So this is a European company, so we'll switch the revenue from your European dollars or euros to USD. Let's check out the sales right here. So the sales are dang, they do 10 billion of sales a quarter pretty much. What about the net income from that? So looks like they had a little one-time adjustment there, but they pretty much just make a billion of net income every single quarter. So that's pretty crazy. Oh, see, my phone's getting low here. So anyway, that's probably a good spot to end the stream. I'll go over my portfolio one more time. Hey, if y'all want to support me, if y'all want, or if you want to rewatch the stream, because we've been live for over 2 hours, you could go back to the beginning. I'm streaming on YouTube and TikTok right now. You can rewatch the stream on YouTube, and I just really appreciate if you subscribe to my YouTube channel. You know, I don't sell anything. I don't got a course, book, Discord, WhatsApp, Telegram. I don't got none of that. Literally just on here giving my opinion. And oh, and if you want to download any of these apps right here, like this is my favorite app right here. It's called Moo. If you want to get it, it's in the link tree in my bio. It's the very first link there. It's where I like to park my idle cash, and this is where I do all my analysis. Like I have Robinhood as well, but Robinhood is just a very simplistic, basic platform. You can't do any real research on a stock on Robinhood, so that's why I like Moo right here. So anyway, if you want to get it, link tree in bio. Hope you have a great rest of your day, and watch out for people impersonating me as well. This is my only account. I won't follow you. I don't sell anything. I don't got a course book. None of that. I don't have a WhatsApp or Telegram. So there's a lot of people impersonating me on